It's like you are the girl on the side or the person on the side, and I got everything that I needed, and now I'm done. And thanks so much. But we're still tied to this product because, unfortunately, in the meantime, all of the competitors, for the most part, were kind of taken out.
Books? Check. Lunch? Check. Ball game? Check. Unlocking that off-campus apartment? Wait, what? Check. Because when students can use their mobile ID everywhere they live, learn, and go, life just works. With Resident Key in Wallet, Allegiant brings the student experience on campus now to off-campus living in one simple motion, giving students freedom, property owners fewer lockouts, smoother turnover, and stronger NOI. From campus to couch and every moment in between, it's access that finally keeps up. Because student life doesn't stop at the edge of campus, and neither should their access. Unlock it all with Allegiant.
What's up, everyone, and welcome to the Student Housing Insight Podcast. I'm your host, Wesley Deese. I'm also the CEO of Student Housing Insight. This is your first time catching a Student Housing Insight podcast episode. We're not just a podcast, we're also a platform for off-campus student housing professionals to network, share ideas, as well as data. And you can find out more about the platform at studenthousinginsight.com. In addition to the podcast, we also host the industry's monthly webinar for the U.S. called Shop Talk. Each month, we provide legislative and policy updates that are impacting our industry. Shop Talk also provides a monthly overview of pre-leasing data on a national and a regional basis with a panel of operators who provide their on-the-ground observations. And we typically provide a topic of the month as well. So a lot of great information. And if you are involved with the operations of student housing in the U.S., regardless of if you're on the operation side or if you're on the vendor side supplying the operators, you should be registered to receive our monthly invites. You can register to receive those as well as review prior Shop Talk webinars by going to shoptalk.info. Again, that website is www.shoptalk.info, and we'll also provide that link in the show notes. Well, guys, this is our June 2026 wrap-up episode, and as always, I've got the wonderful Gretta Dare here to go over all the news from June. How are you?
I'm doing fantastic. How are you?
I am ready for some 250th America anniversary coming up in the next week or so. Lots of fireworks and all that stuff planned. So how about you guys?
I genuinely keep forgetting that next week is a holiday. I have a bad habit of doing that, though. So there is that.
Well, we are recording this. I don't even know what the day is. I think it's the 26th, maybe.
It is. It's the 26th. See?
It's the Friday before. So there may be some more June news that comes out. But yeah. So next week, I'm actually headed to Nashville to interview SHI Brandon. If for those folks that may not be familiar with that name, SHI is a SVP of Ops over at Cardinal Group. And he's been on the podcast before, and he is actually releasing his third book, if you can believe that. We had him on the podcast for the first book. I don't know what happened with the second, why he didn't feel like it was important to come on the podcast and talk to me about
or something. I'm sure.
Yeah. But he called me a few weeks ago and said, "Hey, this is coming out in the June, 1st of July. Can we get on the podcast and talk about it?" And I was like, yeah, let's try to do this in person. And our folks over at Smarter Furnishings had actually, reached out and said, "Hey, we've just opened up our new showroom in Nashville. Would love to do a podcast." And I was like, well, as a matter of fact, I need to do an in-person interview, and it's SHI Brandon from Cardinal. Can we make that happen? And they're making it happen. They're not only flying me and SHI out, they're flying also my daughter and his son out, because we were like, we don't get to do these daddy kid business trips like we used to. I did that. I think you're aware, when I started the company, that was one thing that I did with my two oldest when we would, scout sites for our student housing summits and that kind of stuff. And so, once COVID came and everything, it was hard to continue. We couldn't do that. And so my two other kids have kind of been left out of that. And so as this was coming up, I was thinking about doing that. And Sly said, "Hey, my son, who's also Sly, he's Sly the third, wants to do, he's real big into wanting to be like a YouTuber. And I thought it'd be cool if I could bring him out. Do you think that's okay?" And I was like, "Actually, I think that's perfect. He needs to see his dad doing a podcast. And then also, this will be a great opportunity for me to bring my daughter out." So we've got some fun things planned while we're out there as well for that. So
I
yeah,
think that's
excited about it.
amazing. And no, I did not know that that was happening. No, the fact that they're doing that and that that whole opportunity is happening, I think is incredible. Being able to incorporate, I feel like that used to be like a more common thing, and I don't even know if they still do that anymore, where it was like, take your child to work day, and that was a really big thing in the 90s, where,
Yeah.
take your daughter to work. And it was like where you were able to have an opportunity to see your parents' workspace and have a better understanding about how, what it was that they actually did and do. And I think it's just one of those things that gives you a better understanding of the work world and not having to wait until you're an intern or something like that. So I love that. And I love that
Yeah.
they're doing that.
Yeah. No, I mean, look, going back to when I was traveling all the time and going to sites and digging into that, I would not want to bore my kids with that. But these type of things where, we're recording media or whatever, I think it's a perfect opportunity to spend some time with them and, allow them to kind of see how, what happens when, dad goes out of town. Right.
When the magic's being made.
Yeah. So look for that episode. I would imagine we'll probably have it out mid-June, mid to late, or no, not mid-June, mid to late July. So
It's going to be out
excited
before we
to.
even record this one. We're going to go back in time. We're breaking the space-time continuum. Stay tuned.
Hey, there has been some big news, some big headline news. I think we probably need to start with that.
I feel like it's been a year of huge news. That's like big news in student housing.
Yeah. Let me bring, for those watching, and again, I'm going to mention this. If you're not watching us on YouTube, if you're listening to the audio, like I get it. It's, if you're the podcast guy like I am, like you love just listening to the audio when you're driving or whatever. But we started doing video podcasting or adding video to the podcast. I don't know, 2 years ago now, maybe.
Bringing torture into Greta's life because I'm forced to try to hold still. Yes. Very bad at it. Also, yes.
But there's just so many things to share, especially as we get data in front of folks that's just a visual thing. And so I would highly encourage you, yes, listen to us on your podcast apps, but also make sure you go to YouTube and subscribe to our YouTube channel and get alerts on that. And I think it brings a lot more value, and you can still kind of, if you listen in your car, you can still slide the screen over so that no one has to no one has to see that you're actually watching a video. But anyway, let's bring this big story up. I'll say on June 9th, there was a couple of phone calls that I had, and it verified a couple of things that I had heard a few weeks earlier. And then I went out to, I knew how it was going to impact a lot of people. And so I went out to LinkedIn. Again, if you're not following Gretta and I on LinkedIn, make sure you're doing that. Lots of great scoops on things that we'll be able to provide for those in our industry. But it was about an acquisition that was coming up. And I didn't want to tell anybody because the public statement, as you're seeing here on the screen now, was coming out the next day. And I wanted to kind of just put something out there for everybody to think about, because as we've talked about with these bigger acquisitions and mergers, there's a lot behind it. And there are lives and careers that can be extremely impacted by it. At the very least, it's going to put a lot of folks that are involved with that transition. It means extra hours for them, extra coffee, extra Red Bull, and all the things that come with it. And for some, when you're merging companies, it also means that there's a lot of things that have to be considered, both by that employee who is thinking, do I have a spot once this once this transition happens? And if that's the case, do I need to think about things? Should I start looking? And so I was already getting a lot of phone calls on that the day before. And what I really wanted to put out for everybody, and thanks to all of those that responded, was a conversation that we had at Interface with Brian Shelengoski and Jim Shoulders with Hugo, and then also Chris Johnson from University Partners, because they had all gone through really big acquisitions in their careers. Some very recent, obviously, with Jim and Hugo with the Campus Advantage merger, and then also even before that, back when he was with ACC and they purchased the previous public company that GMH had started. Drawing a blank on what the actual name of it was.
That was when I started with them.
And they had provided some really good insight for operators just to think about, what it actually takes to do that. And so we played that conversation. And in fact, let's play that right now. All right. I want to talk about consolidation amongst operators. We're continuing to see a lot of the top 25 operators merging or acquiring one another. The biggest this past year was Hugo's acquisition of Campus Advantage, but we also continue to see a lot of operators who are growing their footprint through white label services. So I've got two questions. One, what's your personal prediction for 2026? Will we see any other top 25 operators merge or acquire? And then the other one, Jim, you've been a part of some huge acquisitions. You were at ACC when they acquired College Park Communities. You were added to the Hugo team in the acquisition of Campus Advantage. Brian, you were at EDR when Graystar took them private, and then University Partners, of course, had that big deal with KKR. And for those that are listening to the podcast, and maybe it's an executive that's looking to construct the next deal or a merger, or maybe it's a regional manager that's just being told, their portfolio is about to go somewhere, or they're about to get a much larger portfolio. What advice or lessons learned would you share with them on how to prepare to transition platforms, people, et cetera, with those mergers?
I guess to the first question, yes. I think there will be consolidation. I've heard some rumors, but beyond that, I can't speak to it. But I do think that there will be. That would be my prediction, especially if the environment picks up a little bit to where things can transact. I think if you're talking about a big merger in student housing, by the bed student housing, I think that if it's for an owner or for a company, if you're looking at taking on a big portfolio, I just cannot underestimate that just to say that it's probably going to be a lot harder than you think. You think it's going to be hard, but it's even going to be harder. It is difficult to scale in by the bed student housing. Certainly there's people that do it. We've done it. We've made it work, but it is challenging. I think that, again, more so talking about this in terms of a company that's thinking about doing it, or owners that think about doing it, I think it's very important to invest early and often in firepower. You don't take on a big portfolio and do it on the lean. That's just not the way that it really works or works well. You need to really work to connect with the staff of the existing properties that are there. to really connect with them, to hopefully convince them to stay on board. It is so much more challenging, as we all know this, to buy a property, let alone a portfolio where you don't have any staff at the helm. And we've probably all been there at some point in time, and it's a big challenge. And then really it's have time to plan for this, right? It's one of those, sometimes it's like, oh, we're going to buy property and we're going to close right away. There really is value to being able to have your operating team, you have some time to plan, get your ducks in a row, talk to the staff that's there, build up your bench on the inside. Because that's a big thing, right? If you're going to add 30 properties to your portfolio, you can't do it with your existing resources. You're going to have to bring in a bunch of supplemental resources to do it. That just doesn't happen overnight.
Yeah, I echo all of that. I went through this, as you said, from the perspective of a regional manager while at EDR, and then I came in to Be Home on the very end of an acquisition of the Park 7 properties, 6 of those Park 7 properties. And to me, the most important thing is honesty. You got to say 5 words to the people that are impacted. This is going to suck. Because I don't think that people are honest with the teams that they take on. There was a study done years ago when I was in grad school in the Miami area where they polled some folks that were waiting in line at the Miami Marlins stadium. And long story short, the people that they told the line was going to be an hour and a half were substantially more content than those that they told the line was going to be 10 minutes. And so the story of that is, the moral of that is, be honest with the people. Tell them it's going to be very rocky, because it is. It doesn't matter. To your point, Jim, it doesn't matter how much you prepare for an acquisition or a merger, whether you're taking on 19 properties or 5 properties or even 1 property. It's going to be very difficult. Even if you prepare and you plan, you have great checklists and you have a great team that's taking it on, it's going to be tough. And you need to be honest with your people, because why not under promise and over deliver, as opposed to trying to paint a picture of rainbows and butterflies, and then it ends up being really awful on the people. Because that's the most important thing, to your point. If you can retain the people throughout these processes, you're in a world of a better situation.
Yeah, and I think too, in that, especially in the initial phases of a big transition like that, really focusing on, the big things that really matter out of the gate instead of trying to focus on everything at once.
Yeah.
And I think that, the biggest thing is just giving the team and your leaders the ability to say, no, like that can wait. And I think, as leaders, we're charged with that, to kind of lead by example there and make sure, especially like getting a hold of the pre-lease, like getting a hold of the team, making sure that they know they're supported. I think being honest with them up front, as you mentioned, is really important. The second thing I'd add is getting control of the data. I think the data, the sooner you can get the data coming in, that just really gives visibility to see, to kind of test like, hey, like here everything's going well, but maybe it's not because we're seeing this, this, and this. So it's a way to reinforce what the team is seeing on site on a day-to-day basis. And then I think, Brian, you mentioned it, make sure that there's those pathways for the team to ask for help. And, one thing we say a lot is, hey, if you ask and we say no, that's on us. But if you don't ask, that's on you. And so really making sure that, especially the leaders that are charged with making sure that transition is successful, have the ability to ask for what they need and don't make it hard for them to do it.
So yeah, a lot of folks commented on it. And of course, what we're talking about, or what that ended up being, was this headline on June 10th, the Scion Group. If you'll remember, we talked last month about Scion completing a big major deal with acquiring several properties from Harrison Street, which made them the largest student housing owner in the country, which I guess actually means, that mean the world? No, I think UGO still holds up. But the Scion Group to acquire operating business of student quarters. Those that may not be familiar with student quarters, they're an Atlanta-based firm with about $1.5 billion in student housing assets that they own, manage, some third party, but mostly owned with some strategic partnerships that they have. So anyway, let me jump into this headline really quick. The Scion Group has entered into a definitive agreement. Now, I'm going to stop on a lot of this as I read it, because I love public releases or press releases and reading the words behind the words. And there's some stuff here that I think, people should pay close attention to. So I'm going to stop and not necessarily going to explain what they mean. I'm just going to say, think about it. Here's what I think that means, or it could mean this. But anyway, all right. The Scion Group has entered into a definitive agreement, which is a very unique way of saying this is going to happen, to acquire the operating business of Student Quarters, an Atlanta-based operator with a portfolio of $1.5 billion in student housing assets. The firm's senior leadership, meaning Student Quarters, will retain asset ownership positions following the closing of the transaction. So
those two sentences already say a lot.
yeah. So I'm like, who's senior leadership? And you can go to Student Quarters and go to their about page, go to leadership.
Well, the thing is too, is that second sentence already tells you the structure of this deal, which was something that you and we discussed this entire press release prior to, obviously. But it breaks down the deal in a way that not necessarily everyone would recognize right off the bat. It's that
I would say it summarizes the deal.
Fair. But it's that I think that a lot of people are going to hear this and they're like, oh, so that means that Scion is acquiring Student Quarters, or they're acquiring all of their properties, or, they're just going to read it and they're going to think that this is the same old, in the way that, all of these press releases happen. And that is, in fact, not what they are saying. And in those first two sentences, that is, in fact, they're telling you something entirely different, which is, it's a very key difference. And it's that they have the senior or the executive leadership that is they're signing a deal with. And that means that their executive leadership is actually going to keep ownership control of the actual real estate assets that Student Quarters actually owns. So it isn't that Scion is going to be buying all of the properties that Student Quarters actually currently owns. It's that they are going to be keeping these executive leadership members who have their ownership equity in those assets. They're going to keep them, and that is a really.
Yeah, I mean, I can assume so. I don't know if all these, but here, pulled up the website. I've gone to their about page.
That's how it reads, anyway.
Yeah, it said senior leadership. You've got executive leadership, which is Andy. I don't know if I'm saying his. I've always just called him Andy, but Andy Fenor. Just completely
Fenoy.
Murdering your name, Andy.
To me, it looks like Fenoy.
Or Fenoy.
Maybe wrong.
Keith Jernigan, president. Stephanie Lynch, chief investment officer. Andrew Layton, chief acquisition officer and chief experience officer. But and Andrew, I just got to tell you, that says so much about you when you are the chief acquisition officer and the chief experience officer. I don't know that I've ever seen
those two titles.
Yeah, and I know Andrew and I know Stephanie. I've had conversations with them, not so much with Andy or Keith. Certainly know who they are and their experience within student housing. But I've had dinner with Andrew. I've had phone calls, or been on phone calls with Stephanie, I should say, and you got to know Andrew Layton to understand why that is such of a great second position for him at Student Quarters, because he's probably, there's always the ops people and, the acquisition and finance people, and everybody kind of knows their lanes, but the experience part, regardless if you're just talking about experience of employees or experience, of residents, typically your finance and acquisition guys aren't going to
they're not the ones that are dialed into that.
But Andrew
is
100% dialed into that. But anyway,
he's
that's under executive
person.
leadership. Again, I'm just critiquing, this press release. It talks about senior leadership, and I know just about all of these folks, Brian Curley, Lenny Wright, Shannon. It was confusing to me as to, they've got ownership. It didn't make any sense. I think what they're talking about is this executive leadership, which will be retaining, and I mean, obviously Andy and Keith, and I would imagine Stephanie and Andrew have their own have equity in these deals, and that's what this is referring to. So anyway, I don't know which party put this. I'm sure both of them agreed to the language before it was sent over to student housing business, but that was just a little confusing. But again, the firm's senior leadership will retain asset ownership positions following the closing of the transaction. Doesn't necessarily mean that their position, however you want to, if it's a limited partner, general partner, I don't know if that's changing. It just says they're going to retain that ownership position. Next paragraph, student quarters portfolio comprises of approximately 13,000 beds across 21 markets, in addition to acquiring the firm's operating business. So what is the operating business? That's essentially the management company or the group that is managing the assets. Scion will also invest both in underlying real estate and related fund structures. So it sounds like maybe some of the properties are going to get some capital improvements. I'm not really sure what that means. Next paragraph, the transaction is being funded entirely through Scion's balance sheet. Awesome. No new debt. Yeah, great. All right. And is expected to close in the third quarter. So we're recording this on June 26th, as we said. So July, August, September timeframe. So happy that they are going to experience both turn and transitioning their company to a new platform at the same time. That's got to be just a barrel of fun. Anyway, again, the transaction is being funded entirely through Scion's balance sheet and expected to close in the third quarter, subject to customary closing conditions. I know what customary closing conditions are for a business. I'm assuming there's some level of DD that still has to happen, or everything that was. Sure, there's been plenty of DD that has gone into this leading up to this point in order for it to say a definitive agreement. So who knows? Prior to this transaction, Scion's portfolio consisted, we mentioned this last month, of more than 105,000 beds across 161 communities in 89 U.S. markets. So, quote here from Rob Bronstein, CEO with Scion. The acquisition speaks precisely to where the student housing sector is today. It's increasingly challenging to acquire the most desirable communities in the best markets, and the operational bar is both higher and more expensive than ever. That's a key point, and I would just say, hold on to that. Student Quarters has assembled a very high quality portfolio and is supported by a strong, dedicated, and experienced team. Bronstein continues. At close to 200 communities nationally, Scion is already much larger than Student Quarters. And we overlap in nearly 80% of their markets. So when you combine the skill, resources, and proprietary technology of Scion, I'm not exactly sure what proprietary technology that is. I'm sure it's something they keep under wraps as they are a private company and don't share a lot of public information. So they're on Entrata. So I'm assuming it's some kind of business analytics. There's been other stories about kind of their market analysis platform. Maybe that's what they're talking about. I'm not really sure. Again, let me finish this sentence. So when you combine the skill, resources, and proprietary technology of Scion with all that Student Quarters offers, we are confident we can unlock tremendous value together. Yeah, I think so. This is the thing, and Greta, we've talked about this. This is the reason we're seeing so much consolidation that's happening is, there's a scales of economy type of thing that you have to think about as well. But I'm going to take it back to insurance, property insurance. That alone is going to be saving these properties a tremendous, the 5 figures, probably most of them, maybe even up. I've seen, some of these deals when they go to one of the top 5 platforms, I've seen some properties save well over 6 figures in property insurance because you're scattering that across the entire portfolio that's on that operating platform. So that alone, I'm sure, is going to make student quarters limited partners happy. So yeah, I mean, one more example of more consolidation happening. And I think this is going to take them to so they're 105, so 118,000 beds. Yeah. So, I talked to someone I'll just say they're associated with this transaction, that would know. I asked them about the third party management because those properties, I think there's 7 across their portfolio. And I was just curious as to what was going to happen with that, because the thing about Scion Group is they have always been, owner operated. And Rob and the team, if I've got that wrong, please feel free to call me out on it. But that's very different. Number one, getting to 105, now 118,000 beds. And it's all been, prior to this has all been, stuff that they've owned. I don't think they've done any third party management. Maybe I'm wrong on that, but I'm pretty sure I'm not. And yes, granted, they've got their own, investors and fund managers and everything that they have to answer to. I completely get that. That is not the same, because in that situation, before you closed on a property or closed on a fund, like everybody at least agreed on paper what lane they were going to be in and what the strategy was going to be, and how to handle things when those goals weren't necessarily going to be met. For all of these other third party properties that student quarters has got, my question was, okay, but all of those folks, all of those ownership groups have their own investors, their own goals, their own strategies with that stuff. And so for companies that have never done third party, and then all of a sudden go into doing third party, they struggle. And a lot of times I've seen them, acquire companies in a similar situation to this. And within no time, those third party properties end up falling off because they don't know how to service them. And so, and I've already talked to many other management companies that, have told me they're trying to pick those off. So, and that's what happens. And so, but my question to the person in the transaction was, yes, that's what we're planning on doing is transitioning those as well. And that Scion would like the opportunity to do it. So, I hope they're successful at that. I can just tell you from my own personal experience, unless if you've had folks that are, that have done that, and my word of advice is whoever is servicing at student quarters, those third party properties, they need to be kept in place. And that's another question that has come up is, okay, who's staying on board? And there was another interview that happened with BizNow that kind of addressed that. And I'll read that here really quick. I don't think I've got this to put on the screen, so I'll just read it from my papers here. But with Scion's $1.5 billion acquisition of student quarters announced June 11th, Communications Director Ann Stannard told BizNow that Scion has already reached agreements with several members of SQ's senior leadership team to support integration, and expects to extend offers to additional members of the student quarters corporate team whose experience and expertise will be valuable to the combined platform. Which what that just tells me is there's not everybody's going to be offered a position that's in that corporate team. And I've not only does that, I know that's going to have some impact on the third party clients and probably their thoughts around the situation. And then you've also I've gotten the phone calls. I'm sure you've probably got them too, Gretta, of folks that are, a little concerned about
what it means,
where they're going to be after Q3. And it's, I hope the rest of this industry, will certainly kind of rally around those folks and help support them. I've already had some conversations with some that have reached out to me about things that that might be up their alley. So, and man, that's another tough thing about these type of transitions is, the employees they've got to take care of number one as well, right?
You
So
already know how I feel about that. I think the number of times, and to be completely transparent, but you already know this about me, but the number of times throughout my career that I had been told that, well, the company is always going to look out for the company. And I'm like, so then does that mean that the team members or the employees or the staff that they can just look out for themselves? Because that needs to be allowed to go both ways. Because either everybody looks out for everyone or it's every man for himself. And I think
yeah,
that we have a tendency to forget that. And we expect this to be a one-way relationship. And that isn't fair and it isn't right. And there's the power dynamic really means that our team members should be able to rely on us as a stronghold and a strength on this side, as opposed to us saying, well, you need to be here for me because what am I supposed to do without you? Ah, what?
yeah,
But yeah, it's the student quarters team. They had some really exceptional people. Some people, like you said, that we both had relationships with that we know really well. I've referred people to their company, obviously, because of the fact that I know that they had some really exceptional people. So for whomever doesn't make that transition, we know that the rest of us stand to benefit from that, from anyone else's loss.
yeah. Prayers and thoughts with everybody having to go through that transition. But I will say, all in all, I think this is a good thing. I'm really happy for the folks in the executive leadership because just knowing the environment over the past few years and how hard it has been to grow a company in this sector when competing with these bigger groups. I think this is a good. I don't even want to call it an exit. It doesn't sound like they're exiting the industry at all. It sounds like yeah, they're on to the next chapter, trying to figure out what the next chapter looks like. So, congrats to them. And looking forward to what happens. I'm excited for Scion. There's a lot of things with Scion that over the years I've kind of scratched my head and just said, well, that's not how we do it in student housing. And I think they have continued to keep.
I love that though.
Yeah, I think. Yeah, of course. I think they've continued to certainly keep the client, both the student resident as well as the universities, the main thing. And I think it has served them well, and look forward to seeing what happens next. Which I know everybody's been asking me: is this the next thing before an IPO and them going public? I don't know. I don't have any inside track. There's certainly been speculation, but I've heard that specifically about Scion for at least the past
I
3
feel like
years.
that's been like a huge speculation and question that's been going on for at least 3 or 4 years.
Yeah, and I think they're certainly well positioned for when they went through the rebrand of their properties and like coming up with these 3 to 4 distinct categories of Red Point. What's one of them's Larkin or something like that.
Yeah, they have like 4 distinct brands listed on their website.
Yeah, I felt like that was kind of their way of kind of prepping themselves for it. But it just hasn't made sense. I mean, we've been seeing everybody that was public, move away from that. So I don't know exactly. I just don't understand that well enough to know if that makes the most sense. There's another group that is teeing up an IPO that owned very little as of today, but they've come up with this. It's called a SPAC, and it'd be interesting to see how that rolls out, kind of at the same time. Got my own thoughts on that too, but anyway, yeah, I don't know. I think I will say this: we need a large, one of the top 3 largest owners to go public because we need public information again in this industry.
I just miss having public companies. When I first came in here, we had 3. I miss
Yeah.
that.
Yeah. I mean, I can't tell you anything today about Scion's portfolio because I don't get any public data.
It's very,
So,
very secret.
yeah. So, if
They have
I don't
some
know.
stuff that's, if you troll through their news and stuff like that, you can glean some information very
And
carefully, but
and I will say
they're
some of
very
the
tight-lipped.
even one of the posts that they made today on LinkedIn, which I really liked, just had to do with setting rates and that kind of thing. Very much in agreement with their philosophy on that. But yeah, some of the stuff that they're putting out, as far as blog type stuff, it's not just so that they can be, it's not just to help with their SEO. It's definitely shaping a narrative. And so I don't know if that's just around investor, maybe raising another fund, or maybe if it's something else. I don't know.
Yeah. I have my own hypotheses as to what all they potentially have as far as like their tech stack would be concerned, but I wouldn't want to just throw that to the wind and see
Yeah,
what
it's all
stuck.
speculation. It's
Yeah.
all speculation,
I wouldn't want
but
to
I'll,
speculate
yeah, but I will
publicly.
again reinforce this sector desperately needs another public company, because I am missing public data that
I'm
we used
fine
to
with
have.
it.
So speaking of previous public companies, our friend Bill Bayless over at Maslow's Campus Communities, of course, those that don't know, that are fairly new to this industry, Bill Bayless was the one of the founders and CEO, and was the CEO of American Campus, which went from the New York Stock
He's one of the
Exchange.
godfathers of our industry, darling. You
Yeah.
must know who Bill Bayless is.
Yeah, to go private and sold to Blackstone several years ago. But anyway, he was on the podcast a year or so ago talking about the launch of Maslow's Campus Communities. And back in January, we sit down with Leah, who leads up their operations, to talk about their first acquisition, which was in San Marcos. And now they have, because when Bill told me what he was doing, I was like, this is going to be heavy P3, and they haven't, won a P3 RFP yet. But congratulations, because this month, University of Washington, Tacoma selected Maslow's Campus Communities, founded in 2024 by Bill Bayless, ACC co-founder and former CEO, as a developer operator for a $115 million expansion of 300 beds, a 17,000 square foot dining hall, plus acquisition and renovation of the 128 unit Court 17 building, pending the UW Board of Regents approval in January of 2027. Completion expected late 2029. So congrats. Excited for those guys to get a P3 on the board.
I'm very excited. I obviously have been unreasonably excited since the moment they announced that they were re-entering the industry. And regardless of the fact that it wasn't just P3, I love San Marcos. I have great many memories there. And so I love the fact that they were there too. So yeah, I think this is all great news. Very exciting.
Well, speaking of other news that's consistent, we keep talking about these. I don't even know what nickname we need to give them. Uber student housing communities. I don't know that fits.
The gigantors.
Yeah, behemoth. We should have spent some time in our prep thinking about what we could call this.
Workshopping the new name, since this seems to be everywhere now.
Yeah, once you log into Claude, Grok would actually be a better one. We should log into Grok and see what
use our cranial cavities and come up with one on our own.
Yeah, you know what? Sure. Core Space's 3,500 bed expansion at Illinois. Core Space has announced three new purpose-built developments near University of Illinois Urbana-Champaign, totaling more than 3,500 beds to deliver between 2028 and 2031. Built on Hub Champaign, Green Street, 490 units, 1,577 beds. I'm kind of curious. I think H.H. Redstone had a property on Green Street that they had a third phase, and I swear those numbers are the same. I wonder if they just acquired that. I should probably look into that. I don't know, because I know that when I talked to them, HH Redstone earlier in the year, they had delayed that second or third phase. But those numbers sound very
Would they
familiar.
call those developments?
Yeah. So, and that's all of the information that I've got here on that. I do remember reading this on Student Housing Business Magazine,
Yeah.
and is definitely going to be multiple properties, not multiple phases.
Yeah.
Some of those properties may have multiple phases, but it is definitely three separate developments. So it's a lot of beds, a lot of beds.
That's a lot.
And I will say, I mean, in the way I kind of read some of the other news that came out about this at the same time, I'm not too sure that some of this isn't replacing maybe some existing very mature student housing that's already there. I don't know that for a fact, but just reading between the lines, it sounded like that might be the case. But I'll tell you, I mean, I finished an analysis on Champaign back in August of last year. And I mean, that university is just bursting at the seams.
It has been forever. It's just one of those markets, and that market will get you too, man. It isn't an easy one.
Yeah, that's one market that I have not personally managed anything in.
Oh, I have.
Yeah, we've had stories about it. We've had stories about it. Hey, there's one other thing that before we kind of get off the complete conversation of acquisitions and things from that standpoint, I got a lot of. It's just amazing when these things get announced. Everybody starts DMing me and sending me text message. Oh, did you see this person ended up buying this? And one of these was.
Wes has so many friends.
Well, I've got a few folks in student housing that know that
kidding. You're allowed to have friends that aren't me.
They know that I'm passionate about all of this, and they're constantly reaching out. But anyway, New Mountain Capital announced an agreement to acquire Asset Living. This came out right around, I think, June 2nd, maybe. It was a private equity group, and I did reach out to Jason Ford just to say, hey, getting some inquiries. What does this mean? And he's like, it means absolutely nothing as far as the rest of the world is concerned. It's a new private equity group that is investing, and this is actually their third since they've been in existence. And it was a big number that was thrown out there, and so I think a lot of people were like, oh, what does this mean? And
it sounded like news when it really wasn't, because I think that the story is gone now.
Yeah. So folks that saw that, and because I've even heard now weeks later, oh, you cheer assets getting purchased, and what's happening there? No, that's not what you think it is.
Nothing happened.
Hey, I want to shift to some legislative and policy updates, and want to use this opportunity one more time just to tell everybody, you've got to be watching Shop Talk. Make sure that you go and register.
Didn't we already talk about this? Didn't I already use a stern voice with everybody listening? Do I need to use it again? What are you doing? You can play it in the background while you're working. You need to be on Shop Talk.
You definitely have to be there for the ones where we sit down with Dave Borzos from NMHC and go through things. But the past couple of months, we've been following this housing build, the Century Road to Housing Act that has been going through the House and the Senate and back to the House and now to the Senate. I had both Dave as well as Will Baker from Walker Dunlop on to talk about it, because this was going to probably completely end the BTR, the build to rent. For our UK listeners, build to rent is not what you guys think it is or what you guys call it. They actually call multifamily conventional build to rent. Anything that's built with the purpose of renting it is BTR.
Okay.
In the UK, here it is literally
houses built
single family home communities that are built with the purpose to rent.
Purpose-built houses to rent. It's a very confusing term. I remember when I first started hearing it. I was what the hell does that mean?
I would say houses built with the purpose of renting. So
Oh, God, you're insufferable.
the issue was it was going to require basically that those be sold off as individual homes within 7 years. And not only does that mean the BTR properties that have already been delivered, that completely changes, their investment prospectus and everything else as it related to current investors and the promises that they made to them. Because now this is, we're not going to exit out of this, as one big sell. We've got to do this as individual homes that are being sold.
Can't they come to a compromise and be like a percentage of them will be sold within a set period of time?
No.
Yeah.
That's and the thing is this is completely not making housing affordable. Most of the folks that would be renting these houses, the size of the homes, what all comes with and everything else, like they wouldn't be able to purchase these homes, number one, because in the markets that these were typically in, it would be out of reach for most folks. So it was doing the exact opposite. But anyway, where that ends up impacting student housing, most of those BTR developers come from the student housing industry because before they were BTR developers, they were student cottage developers. And so even if it was we talked about Scion, I think it's the Red Point brand that is their cottage style. I may have that wrong, but one of their brands
I want another brands.
Yeah, one of their brands is specifically for these cottages. And so same thing, those would have to be individually sold in the next 7 years. There's not the market for, you go to Clemson or, some of these universities that there's not a huge, multifamily market there. Like, I don't know who exactly is going to be buying those homes. Especially through a transition of going from purpose-built student to selling to individual citizens. But anyway, so quick update. And like I said, we've been updating everybody on Shop Talk regarding this. Most recent update as of the recording of this on the 26th of June. That did the House ended up striking not all of that, but they basically cut everything out that was going to impact BTR. There's still some things on some broad language that it's not really clear, but I think it's also something that they don't want to push too much on, especially when it comes to institutional, what they're defining as institutional owners, which would be over 350 units nationally. That's not just like your Blackstones and your BlackRocks, and that's those are some pretty small companies that do that. I mean, you've got with Vitra Housing, you've got owners that probably come close to that. And so it was going to impact way more people than I think what anybody really realized. Anyway, that got cut out of it, went back to the Senate. The Senate approved it. And now the president is using it as leverage to, and has said he's not signing it unless if Congress passes the Save America Act.
Is it Save America or Save Act? The Save Act.
Yeah,
I'm trying to find, by the way, because I realize that the way that they have their brands broken up is the self-starter, the go-getter, the free spirit, and the trendsetter. So it doesn't name each single one. Yeah. And I'm like,
but initially and you can click into it. Initially, they label those just like Hilton does with Hampton Inn, and
it looks like the cottages are the free spirits.
Yes, they are.
Okay, I got it.
Yeah.
Okay.
So anyway, so that's where things are at. Shop Talk for July, which will be the last one until after move-in day, because we do not do a Shop Talk in August. But then the next one for July is, I should have wrote that down. It's the 18th, I think. I know it's the third Thursday within July. All right, let's move on to the next story. This was another talking about companies going public.
I know. That's why I actually thought that's where our transition was going to go. I was almost like, well, speaking IPOs.
So this happened on the same day as I know it happened on the same day as the announcement of assets, new equity group, private equity group. It was because I reached out to someone that's kind of entangled and said, "Hey, what does this mean for you?" And anyway, long and short of it, they said, "Yeah, between that and the Entrata news about their IPO," and I was like, "What?" And they sent me something that wasn't really widely known at this particular time. I mean, it was publicly known, but it wasn't widely known. Entrata wasn't blasting it out, but they filed their S1 with the Securities and Exchange Commission, which is basically, that's what you file when you want to become when you plan to become a public company and have your initial public offering. And that has been done. Now that means, they may not be listed for another year from now. Who really knows? What's interesting about it, a couple of things. One is going to be just, I've seen this happen before. It did not result well for operators. So we'll talk about that in a second. But what else is strange, and what's strange is it hasn't happened before now. You're just not seeing, especially the only tech companies we're talking about going public right now, are AI companies.
I know. I was like, Anthropic? What?
Yeah. And so, for any type of software company, making this and the huge losses that so many of these public software companies have already got, so anyway, it's kind of odd to see a software company doing this at this particular point in time. So we'll see what comes out of it. But here's the word from the press releases. On June 10th, Entrata appointed, or this is how it got released. It wasn't about the S1. It was about an appointment for their board of directors. And I think this is very revealing.
Mm-hmm.
Entrata appointed OpenAI executive Adina Hefetz to its board of directors, tied to a major industry story. Entrata filed to IPO at a $4.3 billion valuation in June. We'll link that story in the show notes for those that may want to go take a look at that. But here are my thoughts. I saw this happen with RealPage. The minute it happened with RealPage, and I don't know if this is a warning for operators or a warning for Entrata. I've got lots of friends and folks that I love and admire over at Entrata. But let me tell you, as a client of RealPage, when they became public, and I greatly admired RealPage, especially for their customer service and what they were willing to do for the student housing industry. They were very focused on creating things that we needed. And that budget module is still just outstanding. And that's not just a student housing thing. But anyway, customer service went out the door. And that's one reason Entrata had such of a great ramp up, especially within student housing, because we were just tired of it. Absolutely tired of it. RealPage is no longer public. They went private. I couldn't tell you if, the customer service has come back. I don't know. I know companies that they've acquired have gone there and just kind of melted away, and that technology has been picked up elsewhere, within the companies, within that company. But I hope that doesn't happen with Entrata.
Here's the thing. The reason why, because it's like we're talking about the topic of things changing if they go public. What's going to change? Let's be honest. This is a topic that comes up and has consistently come up in this industry and has forever, when everyone is talking and on a consistent basis as it pertains to Entrata. There is not a single person that I know who has been happy with Entrata for at least 2, 3, 4, maybe even 5 years. And it is because of the fact that there was the Entrata that was property solutions. There was the Entrata that was Entrata for the next 2, 3, 4, 5, 6 years after that. And then there is the Entrata that hasn't changed web wrappers since they became released to the industry, where the guest cards still can't be updated and altered or changed to fit our industry, where the feedback continues to be given to a software company from our industry and our sector, where it felt like once every company was brought on to the software, it was made very clear, or it felt like it made became very clear that clearly our whole entire sector was secondary, as it's always been secondary. And it was kind of like, to give like a really kind of crass example, it's like you are the girl on the side, or the person on the side, and I got everything that I needed and now I'm done, and thanks so much, but we're still tied to this product because unfortunately in the meantime all of the competitors for the most part were kind of taken out. And that's what sucks about it, is that it's like, this is where, it was like with RealPage, as they did, become public, it ended up, one site kind of fell to the wayside as far as a product was concerned. And, as they kind of quilted all of these other products together, and it wasn't as good, especially, when Property Solutions first came out. And Appfolio, for a lot of people in this industry, typically aren't as excited about their student product as they were and are about, Entrata as it's continued to be. And who else is there where it's like Yardi doesn't necessarily have anything where people feel like they have something to offer. It's like, that's the problem, is that people don't feel like they have anything to turn to. And the reality is, and this goes to your point about them going public, especially right now, is that we have companies who are really kind of getting to a point where I feel like we're potentially about to turn a corner, where if software companies don't step up and become something greater in their offerings, we have companies that can create their own software between hiring some people and working with AI to be able to develop something that will work for them in house. And I'm not saying it's not simple. I am very well aware of how this process works. I'm saying that it isn't that far off.
Yeah. Yeah.
And that is the reality of it.
Yeah. And I mean, look, I want to say it publicly because the folks that you and I talked to will
and I am
not
aware
say
of
it
how bold of a
publicly.
statement that just was.
Yeah. Yeah. I mean, there is a lot of frustration that I hear from, look, nobody wants to change their software, their property management system.
It's a huge commitment.
It's a huge task, and you got to retrain people, and you got to find people that can support. It's
huge to the resident. It's highly disruptive. And honestly, the implementation process, that's another whole complaint.
But Entrata was really built student housing first. You don't know the story, ask somebody, and ask somebody that was at asset living or asset campus living at the time.
Yeah.
15, 20 years ago. And there was, they worked directly with them to incubate that property management system because they were already building their websites and under Property Solutions. And, that's what became Entrata. And they got
nobody knew where that reference was coming from when I kept saying Property Solutions. Entrata used to be Property Solutions.
Yeah. So that's, I mean, and now they've grown so big, they don't need student housing. That may be a little tough for folks to hear. And I'm sorry. I mean, it's just the reality of it. And it's very frustrating from operators and folks that have to support the systems and technology side of it on some of the lack of innovation and just general attention to things that they wish that they would give. And when things go for 2, 3, 4, 5, 6, 7 years of enhancement requests and things like that, just don't ever seem to make its way to the roadmap. People are going to begin looking for other solutions, right? And some of those, I mean, I can understand from Entrata's standpoint that they would just prefer you look for solutions elsewhere that they can integrate with. Completely get that.
Well, and
But
from a certain perspective, it's understandable. Everybody's not going to get everything they want, and that's fine. Like, no, I don't think, and no one's asking for that. And it's
yeah,
also, I've always been the biggest cheerleader and proponent for this software. It's
yeah,
having reasonable expectations, and that's it. And to not
yeah,
cast aside an entire industry and basically tell everyone to go F themselves, like that's
yeah.
really what it's become. And that's where my frustration comes from.
Well, yeah, and there's players on the operation side that are piloting other PMSs. There are also other software companies and adjacent companies that are saying, you know what, maybe this is our time. It's a huge climb, especially if a huge lift, especially if these companies, I don't know what you want to call it, but if these platforms that people are, thinking about building, trying to take on, I mean, and I think if Entrata could have fulfilled all their needs by just supplying the student housing industry, they probably would. But that they obviously wanted to build something much bigger, or had to build something much bigger that needed to expand to the other, to the conventional set. And that's happened. So I just, like I said, that's a big lift. I hope customer service does not go down at Entrata, because it seems like anytime a company goes public, especially in the software industry, everything with customer service seems to go out the door with it. So,
Those were my thoughts.
shall we move along?
Yes.
Congrats, by the way, to the folks that have been working on this at Entrata, because as much as I advise and throw up the caution flag and say, please don't forget who you are, because that's the other thing that's been so special about Entrata, Utah-based, just salt of the earth folks that
That's true.
have
Some of
been
the kindest human beings on the face of the planet who I love enormously.
incredibly passionate about their product, and I just really I don't want that to change, but it's been changing, and I hope that doesn't further progress. Okay. I want to talk about one other thing.
Wait, under the prop tech and technology section, can I do the AI surveillance thing?
Sure.
It was the one I did think it was really interesting because I do feel like it's relevant. So for everyone else, this has to do with the AI surveillance. So students at the San Diego State University discovered via their student newspaper, and we'll just as a heads up, we don't have to go all into it, that there were over 1,300 AI-enabled cameras that had been installed across campus. And that included 330 or over 330 inside of their residence halls. And these cameras included capabilities for facial recognition, license plate reading, behavior analysis, and crowd density. San Diego State University says advanced AI features are actually switched off. We typically don't ever know if that's true or not unless you delve really deeply into the back end of everything. But the article did frame questions for anyone that should be able to answer or look into. But obviously, this is something that is a really big deal, especially when we're dealing with student campuses and as it pertains to surveillance in general, and really just because it feels very appropriate to just the topic at hand and AI and all the things. But I thought it was really interesting. Did you have
Yeah,
any
I mean,
thoughts?
look, if I'm not going to get conspiratorial, but if you cannot see the control grid that is being built throughout this world that is already in place,
I was going to say it's already there. We're just
it's
adding to it
already
at this point.
well, and I've never been to China. I've had friends that have recently come back from South Korea, and it's certainly already there. I'm not saying to push back on this. What I am saying is our campuses in the US is where a lot of this technology is going to get deployed first.
Yeah. It's going to go on campuses. It's going to go on students' technology and software, and on schools, elementary schools, places like that. This is typically how these types of things get rolled out, is because of the fact that it's proprietary software, it's required software, it's public foundational areas and campuses. It's for safety purposes. There's a lot of ways that you have to automatically use things in order to opt in and have access. And you can't necessarily do that with the public. And so it is very interesting. And that's, there was just a huge, not to get like too far off topic, but there was just a huge class action lawsuit that was brought against Canvas. And so like for any of the listeners who have students, the laptops, the mandatory laptops that, or students, let me back up, students who are in the public school system. So the mandatory Chromebooks, that those all have proprietary software that are automatically installed, and come to find out they were, pulling a ton of data and selling that data on all of the students. And so you have different watchdog groups that, go through, they scour that and they catch those types of things. And when it comes to the educational areas of our lives, especially, we're talking about minors or even with students. And I'm one who always, when we call students kids, I've always pushed back on that, especially coming from conventional, where it was like, once you're 18, we were like, you're an adult, you get a background check, you get a credit check, all of that, also because you are. But it's like, when you're on a campus still and you are in an educational environment, there should be certain expectations that you should be able to hold. And I don't know, educational sacred to me, man. Just leave people be. Like, that's just.
Yeah, it's going to be, it's going to be interesting from the standpoint, we saw all of the pushback from folks that are, from students who were graduating this year, as it related to speakers bringing up, the age of AI that they're about to go into, and just, the amount of disgust that they were met with boos from the crowd and stuff. It's going to be very interesting to see how students are going to push back on this, but it has to happen at the campus first. I mean, that's what our campuses have always been, these testing grounds
for guinea pig sites. Yeah.
Anything. So, with that said, I'm going to have to cut the last story, which is around affordability. We'll put it in the show notes.
It's so good too. I'm sorry.
It's 6:20, almost 6:25 here on a Friday afternoon, and I have kids that want to go see Supergirl tonight.
Yay! I love your children so much. I'm sorry, and that was something that I was really excited to have us report on too. So please make sure that you read about all of the affordability stuff. It directly pertains to everything that we've been talking about for months, and it is direct insight into the minds of our demographic. So you don't want to miss it.
Well, fantastic. I appreciate it so much, Greta. Have a great 4th, and we'll talk to you soon.
You as well, sir. Bye.
All right. See you.